We're on. Okay, guys, let's pick up. So many of you must be wondering, we talked about all of these business entities, but we never mentioned the big one, limited liability companies. No, I didn't forget. It's just that it came after all the corporation law chapters. And here we are. We're going to talk about LLCs and a little bit about LLPs. And as I mentioned before, it should sound so redundant by now because we've sort of talked about these concepts in so many different circumstances that they should, we sort of should be able to cruise right by these. What was the first state to adopt a limited liability company and when? Anyone? I think it was in the book. And who? Very good, yes. So I never say that I did not prepare you for a Jeopardy competition one day. I did. All right, yes, it was the state of Wyoming in 1977. So as a creature, the LLC hasn't been around for very, very long. General partnerships have been around for much longer. Corporations have been around for much longer. So, and by the way, just because one state adopted a new form of conducting business doesn't mean that every other state jumped on that bandwagon immediately. Every state now has an LLC option, but it took them time to get there. And the other thing that it took time to get to was whether or not there could be a limited liability company with just one owner. And that was a big deal because, if I could set up an LLC in a cost-effective way, that is the best way for me to run my business. Why would I ever do that as a sole proprietor? It's sort of really changed the landscape in terms of managing personal liability and getting a lot of the benefits that you would from any other form of business. So when people say LLCs are the best thing since sliced bread, they kind of are when we look at the attributes of an LLC. So what is a limited liability company? Well, it is an unincorporated business entity. Why is it unincorporated? Because it's not a company, it's not a corporation. The only entities that could be incorporated are corporations. So it's unincorporated. That truly does combine the most favorable characteristics or attributes of general partnerships, limited partnerships, and corporations. Of course, it is no different than the others. It is a separate legal entity. But yes, the owners of an LLC have to be called something else. They're not partners, they're not shareholders, they are members. Members own the LLC. And as we've said, now every state recognizes a limited liability company, and do we have to have 50 different state laws that have certain similar or unsimilar requirements? No, just like with other business entities, a model act, meaning pretty similar rules apply for what it means to set up a limited liability company in New Jersey versus California, because they've adopted the Uniform Limited Liability Company Act. So yes, you form an LLC in one state, right? Under that state's codified just means enacted state law. And yes, it's been revised, but who cares? I mean, the point here is that there is a uniform law. If I made you memorize all of these names, it wouldn't be fair. Just recognize that there is uniform corporate law, uniform partnership law, and uniform limited liability company act law. Yes, we care about taxes. You care about taxes a lot more as future accountants. How are the profits and losses of the limited liability company taxed? In a very favorable manner. They're taxed as partnerships. So why would you ever elect to be a corporation? But maybe you do for whatever reason. But income or losses, once again, flow through to the members, the owners, the own individual income tax return, meaning no double taxation. No taxation the way the corporations are taxed first at the entity level and then at the owner distribution level. No double taxation. Corporations are the only ones. What can an LLC do? Everything that the other business has. Same powers as an individual. They can buy property, lease property, be sued, sue other, anything that is legal and convenient to carrying on a for-profit business. How do you set up a limited liability company? The same way that you would set up any other business entity type, which is that you can set it up for any lawful purpose. Word of caution. Certain professional groups, such as accountants, lawyers, doctors, cannot set up as LLCs in most states. Why? We'll see in a minute. Well, maybe not a minute. Let's get to the end of the chapter. And remember, these business organizations, these business entity types are creatures of one state in which they file. So an LLC can only be organized in one state, even though it can conduct business in the other states. So the state in which you organize is called what? Not home. Domestic. And every other state is foreign, right? Domestic, foreign, and if you're an LLC or a corporation, you're an alien. Okay, I mean, you could say this stuff in your sleep. So when you see an exam question, it's going to be, what? This is the easiest thing in the world. But, because we've had this drilled into our heads so many times. So a corporation has to file an articles of incorporation. Get it? An LLC has to file articles of organization. Sounds familiar, but yeah, there has to be a filing to be recognized as this particular business entity type. So these are the formal documents that have to be filed in the state in which you wish to be domestic, to say that you're setting up as an LLC and these are my articles of organization. Domestic in the state in which you're organized, and that's the state law that governs operation. What has to be filed, where the filings have to be, and so on. Do you get the benefit of limited liability protection for the owners in an LLC? You better. It wouldn't be the best thing since sliced bread if you didn't. Of course you do. You can have 4 different members that put up 25% each of capital investment into a business, wind up being in debt to a third party, lose their capital investment in the business, but luckily no personal liability unless, again, fraud or some egregious act. No, the fictitious nature or the fake nature of this entity is respected, just like it is in a corporation. And that's important because we know that, for example, is not the case in a general partnership. If this was a partnership and these were 4 general partners, not good, right? Because there is personal liability. No, any amount. Any amount. There could be, states have upper and it could be 1 person. 4 is just the example on this slide. So, as many as the state law requires, but I guess 50 gets to be kind of unmanageable too. But why not? I mean, if you set up more like a corporation, as we'll see, you can have some of those members not managing the daily affairs. So yeah, you could have a lot of members in an LLC, or you could have just 1. So really a lot of flexibility. A case that I don't think did a whole lot because it's the same stuff that we've already seen. This is the Hess case. Not surprisingly, it involved a bar again. Are there any other kinds of businesses that are covered in this book? But what happened? Yes.
SIBA was the lessor, and they had a lease agreement with 1138.
Right. And 1138 was what?
The LLC.
Thank you.
And then they defaulted after 6 months. SIBA tried to sue both the LLC and the individual of the...
One of the owners.
Yeah.
Not surprising, it was probably the richest one. Yeah.
But SIBA lost the case because she could only sue the company, not the individual.
Yeah, again, does that surprise you? I mean, we've been through this. We've covered this ground, I mean, you had another case like this. And the court comes back and says, look, unless there's fraud, unless in some ways there was abuse of using the shield of corporate, we could see, but, there was no, yes, it was bad business judgment. Yes, these were not the most sophisticated business owners, and yes, they ran a bad business, and as a result of it, they defaulted on a lease. But, you can only go after the business, you can't go after the individual owners. You have to respect the limited liability that a limited liability company affords to its owners. Okay, I mean, didn't kind of stand out as a landmark case, but it just sort of showed what, how limited liability applies. All right, let's talk a little bit about liability of those who operate a limited liability company. And here we're going to talk a little bit about managers people that actually run the affairs, conduct the business. You don't all, I could invest money in an LLC and say, you know what, I'm too busy doing other things. I want to share in the profits, but I don't want to help run the business. That's my prerogative. But to the extent that I actually do help run the business, I could have liability as a manager in that business because, I'm not just a member, I'm also involved in operating the business. So, liability of managers, not personally liable, thank God, for the debts, obligations, and liabilities. Well, that's what limited liability is all about. However, you gotta love the word tortfeasors. What is a tortfeasor? A tortfeasor is someone who commits a tort, right? A person who intentionally or unintentionally negligently causes injury. Yeah. So the point here is that if I, just give you an example, what if we set up a delivery business, right? And I set up a business and I am a member, an investor in that business, but I also help run the business, And as part of my job, one day I'm delivering stuff and I wind up injuring somebody. It was negligence. It was an oops, but I did injure somebody. Now, it is true that as the owner of that business, I, should not be personally liable. But the problem is if I'm the actual tortfeasor, I am personally liable. Just because you're an investor in a business doesn't mean that if you commit a tort, that the point here is just to don't forget that, right? But my partners, I shouldn't call them partners, wrong word, my fellow members in an LLC are not responsible for my tort, but I, who personally committed this negligence, could be.
Even if it's well conducted.
Yes, even if it, and that's the point. Even if, who committed the tort? Just by investing in a business, you don't somehow get rid of your personal liability for a tort. Yeah. So, again, the hardest part of this chapter is just keeping the terminology straight. Articles, organization. Owners are called members. The people that run the business are managers. And again, I'm not driving you crazy. These are just the terms that the Uniform Limited Partnership, Limited Liability Company Act uses. So there are two types of LLCs, member managed and manager managed. Try saying that a few times and getting tongue-tied. What's the difference? The concepts are not difficult. Member managed is the members do not have designated managers. The LLC is managed by its member. So that slide that I put up with like 4 people, let's say 4 of us go into business together and 4 of us are going to run the business, okay? And we are investors. What is that? A member managed LLC. Now, contrast that to a manager managed LLC. Here, the members designate certain members or even non-members who manage the LLC. The LLC is managed by those managers. The non-manager members have no right to manage the LLC. So let me take your example of 50 people in an LLC, right? We need a lot of investors. But at the end of the day, yeah, everyone sort of contributed, not everyone, let's just say, yeah, all 50 have contributed, so they're owners, they're members, but only 5 of them are actually running the business. The others are sort of these silent owners. And by the way, we've hired a few managers that haven't invested in the business but are sort of the operating people, and there are another 5 of them. So here, this is a manager-managed LLC with 5 members as managers and 5 non-members as managers. And we'll see that that is important. Why? Fiduciary duty. Who has fiduciary duty and who doesn't? And hold that thought. We'll come to that thought in just a minute. But no one works for free, right? Well, maybe some of us do, but others don't. Compensation and reimbursement. Non-manager member, think about this again. If I'm just an investor, I don't do anything else, do not get remuneration. The heck is remuneration? Compensation, wages. Why should I? I'm not doing anything. I will get profits, but I don't get compensated. Managers of LLC are paid compensation and benefits, right? So here, again, it's important to have, remember we said, should you have an agreement, partnership agreement or bylaws? Here it's called an operating agreement. Have one. Specify who's entitled to compensation and who is not. How much? This is a company, limited liability company that pays benefits. Who's going to get the match? Who's going to get whatever? You want to put that in somewhere. You might even have an employment agreement with some certain key people. And an LLC has to reimburse people for out-of-pocket expenses, right? If I'm someone who has to pay a filing fee to set up a business or to whatever, I should be able to get reimbursed from the business. That makes sense, right? It's a business. Compensation and reimbursement. Now, we talked in agency law about who can bind the business to vis-a-vis third parties. So here it's pretty simple. If it is a member-managed LLC, go back to that visual of 4 people that invest and actually run the business, then all members are agents of the business, and all of them have the authority to bind, meaning vis-a-vis third parties, to, contracts and so on, right? But if it is a manager-managed LLC, the managers have authority, and remember, the manager could be members or non-members, but the non-manager members do not. They are simply investors. They're kind of like shareholders in a corporation that are nothing but shareholders. If you are just an owner-investor, you are a non-manager. If you are an owner-investor who also manages, you are a member-manager. Again, the hardest part of it is the terminology. You get it, but the terminology is what's the hardest part. Could I say this any more clearer? Fiduciary duty, duty of loyalty, duty of care. How many times have we been through this? Don't compete with the business. Exercise the care that a reasonable person would, so on and so forth. You owe these duties. We'll get to who owe these duties. Duty of loyalty, who owes it? A duty owed by whom? A member of a member-managed LLC and a manager of a manager-managed LLC. So silent investors do not owe a duty of loyalty. That's the point, right? You have to be honest in your dealings, not to act against the interest of the LLC, right? Because you owe a duty of loyalty, a fiduciary duty. But maybe the point will come up, but if all you are is an investor, you don't owe this duty. So I could invest my money in one LLC that does the exact same thing as another LLC. I'm an investor. I'm not a manager. I don't owe a duty of loyalty. I can compete with my own business. It doesn't matter. And that's one of the reasons why you may just want to be an investor. You don't want to be a manager in an LLC because you could be sued for violating one of these duties for competing. But if you don't manage the day-to-day affairs, great. You can do whatever you want. You're kind of not putting your eggs in all one basket. And same thing when it comes to duty of care. It's really only owned by those who manage the business, right? So what does that mean? Don't engage in intentional misconduct, reckless misconduct, grossly negligent, not ordinary, but grossly negligent conduct that could economically injure the business. So what that means is reasonable care. What would a person in that situation, if this was only your money, would do? What kind of due diligence before you hire someone, before you pay someone? Most of us would handle these affairs in a very, very thought out, kind of a way. That is what doesn't mean that every decision is always perfect. It's not. Anyone can get swindled. But if in hiring somebody you did what you looked at references, you did a search on them and whatever, and you still got defrauded, well, you can at least say, but I exercised duty of care. I should not be sued over that. Again, who does not owe a fiduciary duty? A non-manager member of a manager-managed LLC does not owe these duties because they do not engage in running the day-to-day business of an LLC. So in a way, isn't this great? It's like kind of being a limited partner, right? Because you know, you don't run the day, but you have limited liability and so on. But you know, you just in an LLC are able to manage liability so much better than you would in a partnership. And that's really the point here. And you know, we've talked about dissolution and winding up and termination, you know, and it's really the same concepts over and over again. You know, can a limited liability company member withdraw, say, pay me off, I don't want to be in this business anymore? Sure, they can. They have the power to do that. The only problem is if you have an operating agreement that says that you cannot do that, that for 5 years you have to stay invested in this business. Well, you signed that voluntarily. Now you want to leave after 3 years, that's wrongful disassociation. You're still going to be able to do it, but the problem is you could be sued for doing it, right? Because why? Contractual breach of contract, right? So it's a wrongful disassociation, meaning you could potentially be liable to the business. And you remember we saw how, like, if you're a partner in a general partnership, even if one partner passes away, their heirs have to wait until the business dissolves to get their investment back and so on. That's not the case in an LLC. If there is no wrongful disassociation, LLC must purchase out, buy out the disassociating member. And that's, again, one of the advantages of owning interest in an LLC versus owning an interest in a partnership. So, I mean, it's all good. To somebody else, depends. What does your operating agreement say? So the question is, can you sell your interest?
Upon the death of the, you know, like if one of the members
Passes away and you have to buy them out and pay.
they don't have the money.
Right.
You know,
Sure.
wants the money.
You did right. You can. The question is, you know, the thing is, can someone else come in? And it comes back to, and you should contemplate these things in an operating agreement, how many people do we want in a business? And you know, if they're going to come in as managers, can we live with them and so on? So the answer is yes, you can, but you just have to kind of consult what deals may or may not be in place under an operating agreement. And again, this is all voluntary, right? If a one member disassociates, whether wrongfully or rightfully, can the business continue? Of course it can. Members can continue to operate, but there may be a filing obligation, right? The operating agreement, not the operating agreement, as well as the article of organization may have to be amended. You know, how many people, who are they? This is a filing that needs to take place. But if the business is not going to continue, maybe it was a one-person LLC. You dissolve, well, that's it. How do you wind up? Well, you know, again, it's a business that is apart from the individual. You have to do it in a particular way. You have to first sell off the assets. You have to pay those assets off to creditors, secured, unsecured, employees, so on and so forth, before the individual owner can take out their profits. And the reason I keep saying that is because this is under state law. How you dissolve, how you wind up, and how you ultimately terminate any of these business entity types. The LLC is no different from any of these others. And yes, you may have an obligation to file an article of termination. Just a filing, could be done electronically. Yes?
When you originally filed, do you have to state if you're a member managed LLC or
That's a good question. When you originally filed, do you have to specify? I think you have. I mean, again, state law varies a little bit. From time to time, I've looked at different statutes, and some are simpler than others. But, you know, if it's a one-person LLC, it's clear. But if it's, you know, the law allows up to 50 people, I think the answer is yes, that there might be some specification of how you're running your business, because it's a matter of public disclosure. But the real details would be in the operating agreement. And that's why, another reason why, if that information changes, it has to be kept updated. And that's a requirement in order to reap the benefit of this entity type. So the short answer is, I would think that under most state law, the answer is yes. I think we've talked about everything but a limited liability partnership. LLP. Remember we said that certain professionals cannot have an LLC? but they can have an LLP. So this is a special form of partnership, but it's not a general partnership. It's not a limited partnership, because in a limited partnership you still need a general partner for the most part. This is a limited liability, the name gives it away, partnership, where every partner can be a limited partner. Great. Great. Why? Well, because you don't want personal liability. Every big accounting firm is an LLP, not surprisingly. In fact, they're the ones that lobbied for it. You know, if you want more Jeopardy information, it was basically the savings and loan crisis of the 80s that actually made some of the accounting and auditing firms responsible personally. And it was like, whoa, that's a wake-up call, right? So this new creature was formed that basically allows a partnership to be set up as an LLP, a limited liability partnership, by filing in one state articles of limited liability partnership. Domestic in that state, foreign in every other state. Not a corporation, still a partnership, still not subject to double taxation. Foreign, as I said, and again, as if we needed another diagram, and don't be taken away by the number 4, it can be any number of partners, invest capital, run a business, and essentially get the benefit of no personal liability. And yes, it's only the capital investment of the business that is at stake when we're talking about liability to third parties. Fabulous. Can't set up an LLC? You can set up an LLP. Great tax benefits, same flow through taxation. Why won't they set up a corporation? Because they don't want to be double taxed. They want to have the best of all worlds, right? And they get to have the best of all worlds. There is no personal liability. However, one of the things that's not on the slides but should be, what's that? Yeah, the book said minimum of million, but it's based on how capital of the business, it's much more than that. The thing is, how do you protect the public and the third parties from the malpractice or negligence of these professionals? You require, as a condition to setting up a limited liability partnership, that is not the case with an LLC, to carry minimum levels of insurance. Minimum levels, and $1 million is nothing. That's just the very basic. Much, much more. So yes, that is the trade-off to getting limited liability protection, but it's a trade-off that is well worth making, and what professional groups actually do in order to run their business as a limited liability partnership. Yes? No. There's no legal requirement to do that, but a corporation will purchase a lot of insurance anyway because they want to protect their officers and directors from liability, but it is not a requirement to set up that business. There's no minimum level of malpractice insurance required, but it is desirable nonetheless.
So what would be the benefit of having an LLP or an S corporation?
Because S corporation, now it's a good question. What would be the benefit of having an LLP where you have to do this? Why can't you just say, because of the limitations of an S corporation. You know, you can't have certain types of investors. You can't have certain number of owners, So, think about how many partners are in an accounting firm. That number 100, you're going to blow through that right away. So yes, there might be a benefit to setting it up as an S corp because you get the tax benefit, but the limitations of who your shareholders can be do not exist in an LLP, but do exist in an S corporation. So you do have to look at both structures to see what may be more desirable, but a large limited liability partnership would not fit into the, for example, the maximum 100 shareholders in an S corporation. So a medium-sized accounting firm might. So again, you have to look at where you fall better.